Good afternoon and welcome to Trade Talks. I'm your host, Jill Malandrino, Global Markets Reporter at Nasdaq. Joining me at MarketSite is April Rudin. She's the founder of the Rudin Group. And the question today is, are you millennial-minded when it comes to investing? April, thank you very much for making it to the MarketSite. But first, tell us about the Rudin Group.
So thanks, Jill. Thanks for having me today. So I think I'm the quintessential 10-year overnight success in terms of entrepreneurship. Around 10 years ago, I could see the intersection between wealth, next gen, and technology, and knew that it was going to be a really seismic change to the way that wealth marketing firms, financial services really came to market and appealed to people. It was no more sort of the one size fits all.
Well, we all know AUM stands for assets under management, but you've suggested a new meaning for AUM. What is that?
That's, are you millennially minded? So I think for many years, most wealth management firms and financial services in general have been very introspective and sort of a herding mentality. They've compared themselves to each other rather than being more introspective, looking out and finding how people might view them. So the are you millennially minded is sort of a challenge to the industry to think about how others view them rather than how they view themselves.
What's the difference, the biggest differences between the younger than 30 investors and over 60 investors?
So there's a lot of talk about millennials and a lot of talk about boomers, and the average age of a financial advisor is 55 now. So the way that they view an investor who is under 30 as compared to, say, a peer who is the boomer age is something that they really need to get their arms around. The under 30 high net worth investor is somebody who is not thinking so much about returns, but is thinking more about their passions. They want someone that's more authentic. They're thinking about the student debt that they've accumulated. They're thinking more about some of the things that are important to them in terms of passions, rather than the over 60, let's say, high net worth investor who may be thinking about their time horizon. They're thinking about healthcare. They're thinking about retirement. They're thinking about the markets.
Right.
They're thinking about some of the other things that are on their minds.
Now, this was an interesting stat that you cited by Deloitte, that millennials are expected to control assets of up to $24 trillion. So the question is, for an advisor, how do you get millennials to trust you?
So that's a great question. I mean, there has probably never been a better time to be in wealth management, but there's certainly a gap between the 55-year-old financial advisor and the investor that you mentioned. Another stat I'd like to throw out is 98% of wealth inheritors change advisors. So advisors need to also think about what their book of business looks like now, who they're holding on to, and what the opportunity is to really gain new assets under management and how they can appeal to them. The key word, the key takeaway I think from this segment I'd like people to think about is really authenticity.
Right. Well, you had mentioned in the beginning that the Rudin Group doesn't take a one-size-fits-all strategy. How does that apply to millennials? Because going back to the keyword authentic, they want a unique, driven experience for themselves.
So what I find in financial services, wealth management in particular, is a lot of branding that's really more about the firm brand than the personal brand. So we really encourage people to reveal more about their own priorities, passions, interests, and things. And those will be the connection points that millennials have with the advisors. So the more that you reveal the fact that you might be a runner, or maybe you make your own wine, or you're really interested in the rainforest in Costa Rica. Those are the connection points that millennials are really looking for, and I think people in general are really looking for, rather than how much money am I going to be making in the market today. That's less important.
So it's more relatable. They can really experience this together.
More relatable,
right.
Exactly, and more about the personal brand, more about yourself. I think that the more people put out there about themselves and what they are passionate about and they're authentic about, that's going to return with investors and clients that are more connected to them and more like them. I see people just going out and looking for investors sometimes that have high AUM or lots of assets under management themselves, but they might not be a good fit for their practice.
Right.
So it's better to put out more information through social media, through digital marketing, and let that return back with clients and people that are more interested in you.
All right. Well, thank you very much for joining us at MarketSite. And traders and millennials, thank you for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.